What's up, guys? It's Hayden. I hope you're having a good day so far, and welcome to part one of my ultimate beginner's guide on how to invest in 2023. I decided to do this guide in two different parts because we're going to cover a ton of material, and I think if I made it into one video, it would be at least 20 or 25 minutes long. I'm making this video now, obviously, because we're at the start of a new year, and I'm sure a lot of people have a goal for this year to save and invest more money. And also, now is a great time to start investing because of what the markets have been doing lately, but I'll go into more detail about that in part two of the guide. So just a quick overview of the topics I'm going to cover in part one, which are more basic topics. We're going to talk about what is investing, why should you invest money, how do you actually make money from your investments, different types of investments and asset classes, different styles of investing, and finally, how to actually put your money in the market. So we're going to start by answering the most basic question, which is what is investing? Investing is putting your money to work for you for a certain period of time with the goal of getting a positive return, meaning you want to get back more money than you put in originally. Investing is different from saving because it implies that there's some kind of risk involved, meaning that there is a chance that you could lose some of or all of your investment. However, the reward for that risk is that investing comes with much higher potential returns than saving does. And two quick examples of investing versus saving is putting your money in the stock market versus just leaving your money in a savings account at a bank. So next we're going to answer the question of why should you invest? And the number one reason you should invest is that it is the best way to grow your money over time. The reason that it's the best way to grow your money is because investing compounds, meaning that you will eventually earn interest on interest that you've already earned. So this means your return will actually get higher and higher the longer you keep investing. I made a whole video about this a couple weeks ago about compounding and how compound interest works. So if that's something you're interested in learning more about, make sure you check out that video. I'll put a link to it down in the description. And the final reason you should invest is that investing is a way for you to make money while putting in minimal effort and time. And this is an invaluable concept for people because everyone already spends a lot of time working for money. And so having a way to make money without having to put additional time in is a great thing for everybody. Next, we're going to talk about how do you actually make money from your investments. And there are two main ways that you can get a return from an investment. There are dividends, which are cash flows, and then there are capital gains or price appreciation. So dividends and cash flows are money that you get for owning a certain asset, and then capital gains are the increase in the value of the asset over time. So an example of an investment that has both of these aspects is a stock that pays dividends, and keep in mind not all stocks pay dividends. Some companies do, some don't. So for each stock you own, you're going to get a dividend every quarter, and then you're also going to get the increase in price of that stock over time. So just to give you some context of how important capital gains and dividends are, the S&P 500, which is an index of 500 of the biggest companies in America, capital gains have contributed to 2/3 of the total return of the index since 1926, and dividends have contributed the other 1/3 of the total return. So obviously you can see from that they're both very important. Next, we're going to get into types of investments and different asset classes that you can invest in. However, before I start talking about the different ones, it's important to talk about the relationship between risk and reward in investing. These two things generally go hand in hand because low risk usually comes with lower expected returns, and higher risk usually comes with higher expected returns. And all of these different investments that I'm going to talk about fall somewhere on that scale in terms of risk to reward ratio. So first, we're going to talk about the most popular investment in the world, which is stocks. Owners of stocks are called shareholders and are fractional owners of the company. Like I said earlier, some companies pay dividends to their shareholders, but most gains of stocks come from capital appreciation when the price goes up. Next are bonds, which are debt obligations of the government, municipalities, and corporations. And because it's debt, it means that you actually get an interest payment periodically for holding most bonds, as well as you get paid the face value of the bond when it matures, meaning the time on it runs out. And on the risk to reward scale, bonds are generally less risky than stocks, but they also come with lower expected returns. Next are funds, which are pooled investments such as a mutual fund or an exchange traded fund that give investors access to diversified assets at a cheaper price. I covered mutual funds and exchange traded funds a lot more in my other video called Stock Market ETF to buy right now. So if you're interested in that, I'll also put the link to that down below. Next, we're going to talk about REITs or REITs, which stands for Real Estate Investment Trust. REITs are essentially a way for investors to get access to the real estate market at a cheaper price. REITs take money from a lot of different investors investors, and then they use that money to buy commercial and residential real estate. And then the investors in the REIT get part of the cash flows and the capital appreciation from that real estate. I might make a whole video by itself about this concept in the future, but this is a good option if you're interested in investing in real estate but don't have the money or time to just buy your own rental property up front. Now for the last part of this section, we're going to talk about 3 other types of investments that I'm not going to go into detail on because this is a beginner's guide and they're usually for more experienced and wealthy investors. The first one is what are called alternative investments, and these are private equity and hedge funds that are usually high risk and also have a high minimum investment amount. Second is options and derivatives, which are financial instruments that derive their value from another asset. These are also very high risk. For example, if you buy an options contract and it expires, then you basically just lose all the money that you spent on the contract. Commodities are things like metals, oil, grain, and animal products that have very quick and a lot of price fluctuation, and these are generally used for speculation, which, like I said earlier, is borderline gambling. And then finally for this section, I'm just going to give my quick thoughts on crypto. In my opinion, and also I think it's just a fact, that crypto is very risky and very volatile. I will not lie to you and say that I completely understand how crypto works and I know what it will do in the future, because I have no idea. There's always a chance Bitcoin could go to $1 million one day, like some people are saying. But here's the thing: if you are serious about investing and you want to invest money with a high probability that you will make a good return in the long term, then I would stay away from crypto, or at least don't invest very much money in it at all. Next, we are going to get into different investing styles. The 2 most common investing styles are passive investing and active investing. So active investing has a goal to beat the performance of the indexes such as the S&P 500, and the way you would do that is you would buy and sell stocks really often based on different price fluctuations. Passive investing is where you decide what you want to buy, such as an index fund, and then you buy it and you hold on to it without really doing much buying and selling in the future. So for beginners, I highly recommend doing passive investing because there are 2 options for active investing and neither one is very good. The first option is to do it yourself, which is not a good option because it takes years of knowledge and practice to actually do it successfully and beat the return of an index such as the S&P 500. And then the second option, which is also not good, is to pay a fee to a fund manager that will try to do it for you. But the reason that's not a good option either is because fund managers also have difficulty beating the market consistently, and so it's generally not worth the cost that you're going to have to pay them to do that. And finally, the last thing we're going to cover in this video is how to invest, and what I mean by that is apps and platforms that you can use to actually invest your money. So as I said in the last section, when it comes to investing, you have 2 options. You can either do it yourself or you can pay a fund manager to do it for you. Like I said before, passive investing is definitely the way to go if you're a beginner, and unless you already have a large amount of wealth already that you are looking to invest, then paying a professional manager to watch your investments just kind of sit there and grow is not going to be worth it. There are many different apps and platforms that you can use to invest, so what I'm going to do is put a link to an article down in the description that will give you several options for apps that you can use to start investing. I will say though, 2 things that you need to look out for when you're looking through these apps and trying to decide which one you want to use is make sure they offer all of the asset classes that you're interested in investing in, and also make sure you know what the fees and any account minimums might be. Personally, I use TD Ameritrade because they have a lot of investment types and options, and they also have 0% commissions. I've been using them for several years and have even reached out to customer support when I've had different problems, and they've been really easy to work with, and I managed to fix all of them. But feel free to look through the list in the article and pick whichever one you think looks the best to you. So that's actually all I've got for part 1 of this guide. In part 2, we are going to cover a little bit more advanced topics, such as how much should you invest and how often should you do it, what should you actually buy when you invest, what should you do after you buy, when should you sell, and then finally we're going to go into more detail about why right now is a really good time to start investing. So as always, thank you guys so much for watching. Keep an eye out for part 2 of this guide in the next day or 2. Don't forget to like, comment, subscribe, and I will see you guys in the next one. Peace out.